All right, welcome back to the Ultimate Trader Workshop. In this video here, we're gonna go back to the basics. We're gonna be keeping it simple, dealing with some simple trend continuation so we get to step away from all the advanced Fibonacci and all of that, advanced pattern recognition, and just kind of, like I said, go back to the basics and see what opportunities look like when you wait. So jumping in here, we are dealing with CHFJPY or Swiss yen. And you see we're dealing with this trend here, right? So of course you want to be keeping your eyes on that and say, okay, how can I get involved in that? You're gonna have to wait until the market tells you it's okay. In a trend like this, you're gonna be looking for that higher high, higher close principle as the market continues to create higher highs and higher closes. Let's say you're looking at these areas here that were getting tested multiple times, and then you get the higher high, higher close breakout up here, okay? Slight correction, and then boom, you get another higher high, higher close, okay? Now, I do want to say, nothing is ever guaranteed in here. No matter how clean a setup might look, it simply doesn't work that way. So the educators and the gurus, they have to stop misleading the people that are coming to them to learn this very valuable skill. I'll say that. Okay, now, so of course, after you get, something like that, higher high, higher close, or H3C, you're going to get a correction. Pullback, outside return, retracement, whatever you want to call it. You're going to get that correction there. All right, so in structural analysis, the first thing you want to do is identify. Remember, there's identify, predict, decide, execute. But we've slowed things down a bit. But you still want to identify how much that correction was using the Fibonacci retracement tool. So I'm going to go to the low here where it started. I understand price action dipped down a little bit, but I'm going to come to the low where it started to the high. So swing low to swing high. And notice that, you get close to the 618. It would have been good if it would have hit the 618. It would have been even sweeter. But that's close enough because you get your reaction after that. Right after that, you go into, of course, trade 3BR, or 3-bar reversal. This one is almost A+. I'll give this one an A-. I would call it A+ if we would have got that 618 and then this 3-bar reversal. Okay, so rinse and repeat. Bearish engulfing candle. Actually, I'm going to take the minus off. I'm going to give it a flat out A. Because the engulfing candle was good, but it's indecision. It kind of helps that it's indecision and not just straight out just bearish. And then followed by doji. The doji is perfect though. The doji is perfect. And then followed by trigger and entry. Okay, so this is this Friday candle, meaning the market closed. But that's okay because it sets up the trade for next week, gives you a chance to decide when the market opens Sunday if you want to go, if you're ready to go. You are clear to go. Remember, this is not a trade signal. This is, more educational, but the opportunities here, I'm talking about it. So trade at your own risk. We are not responsible for what you do with your capital in the market. Consult with a financial advisor of your choice, as the disclaimer at the beginning of all my videos show. But this one right here is very interesting because you completed the 3-bar reversal and it closed taking out the doji, okay? Bearish engulfing candle, followed by doji, followed by trigger and entry candle that must close above the doji. Boom, bout is done. It also would have been better if this would have been completely oversold at the point. It was getting down there, but and there's no bearish divergence. I'm shocked that there's no bullish divergence. Showing this is going up. So those two things take away from it. But being able to get involved in the overall trend as we look for it to do two things, okay? One is to retest the high in which it just came from, to go retest that. That's typically how this works with structure and price action. And then two, to extend off of that. So we would go right into, after we've identified all the stuff, our 3-bar reversal. We got confirmation to go, but that's not going to be till Sunday or Monday. That's confirmed. I don't really see a reason to wait until Monday. I think Sunday is kind of like a good day to go. Just got to be careful because on Sunday, with just so much randomness going on, the market's going to try to shake you off of this before he goes on this run. Doesn't mean that this is going to take off, go to the races. Plus, this is a swing trade on the daily chart. So it's going to take multiple days, maybe even multiple weeks anyway to get to our target. So that being said, target's a target number 1 up here, but you would not take half of your position. You would be looking to add more to to your position, even here at the top. Target number 2 is an extension from the low to the high. And we can basically put on 2 levels for that. And those would be the 127, okay, the 127. So at the 127, you're going to be looking to see what happens and then add again. So you guys understand the difference being when you finally get to target 3, that's the full max 1618. If you get up there, you're now taking 1, 2, 3, 4 positions up there with you versus one little fraction of what was left over because you keep pulling the money off the table. That's the difference in where you are going by following this type of teaching, this type of instruction, by you really learning how to do that, how to really, if that's there, why not ride it? Why not buy into it, compound into it? See, traders have been taught to buy as something is weakening. It's weakening, it's falling, because they're so caught up in the buy low, sell high type thing. But you want to buy in strength. So I wanted to use that as the psychological lesson in this video. So let's wrap this up. We don't want it to be too long. This was an easy one, trend, classic pullback. But the difference is we're using confirmation before entry, not guessing when to go, none of that kind of stuff. So this would look like grabbing the long short tool. And let's say when the market opens Sunday, we're still here, putting the stop right beneath the doji. I'm sorry, right beneath the low action, okay? So we're basically saying, yeah, if you come take us out, then that's cool. We would be happy to pay that tuition, pay the price of being wrong right there. That's okay. We if anything, we'll learn something from it, okay? And then this will set up a 2.45 risk versus reward. Notice we hardly show any trade setups, not really setups, but opportunities. We hardly talk about anything that doesn't result in something at least coming close to like a 2-to-1. This one here, 2.5-to-1. So this is ideally what you're looking for in your trend continuation opportunities. Okay, so I should have asked that you guys hit the like button before I even got going. If you can, please hit the like button. We are well on our way to 500 subs. Should be 5,000 or 50,000 or 500,000 at this point. Doesn't matter. I'm going to be here. We're going to get there. We're going to continue pouring out the most amazing instruction that you can find on the internet as it pertains to structural analysis and advanced pattern recognition. So what else can I say about this? Of course, you guys know that the three bar reverse was my thing. There's several classes on it in the Harmonic Trading Academy, as well as some of the other playlists. So if you want to know more about just that part right there, just head on over to the Harmonic Trading Academy playlist. There might be some in the Ultimate Trader Workshop as well as Turning Point, but that's your guy right there. That's your guy. I'm not saying it's the Holy Grail, but if you're looking to add confirmation to your trading strategies before entering, I haven't found something that's much more powerful than that. Notice this is a very clean chart. You can see it. What's on here? Nothing but a fib. And then watch what happens when we come back. If this thing walks and survives, it'll be more proof of the entire concept in the training and the teaching. So anyway, head on over to the Harmonic Trading Academy playlist. Everything is there on the house. Everything that you can think of is there and more. We'll continue to build. Thank you for your support. Help us get the Harmonic Trading Club to 500 subscribers as soon as possible. Okay. That being said, subscribe to the channel if you're not subscribed. Hit the bell icon so you can be notified when amazing videos like this come out. And you guys be safe in the market. Take care of yourself, and I'll see you on the next video.